Hey everybody, welcome back to the channel. I'm Sheen, your host. This is Money Matters. In this channel, we talk about money, finance, and how to make money work hard for you. Check out my other videos, and if you like what I'm doing, please subscribe, give a thumbs up. It really helps out the channel. And let's get started. Okay, today we're going to talk about the fear in the stock market. The stock market has gone bonkers. Everybody is freaking out. The fear index, check it out. Fear index is at extreme fear. U.S. stocks even halted for about 15 minutes today. It's kind of like a circuit breaker. They stopped the stock market for about 15 minutes because there was a 7% drop in the stock market this morning when it opened. Oil also plunged to record lows, not seen since the 1991 Gulf War. 25% drop in oil prices today. So this is due to OPEC not being able to come to an agreement about oil prices. And so oil prices are starting to drop. Saudi Arabia is upping up their production of oil, so they're flooding the market. And as a result, it's just supply and demand, guys. If there's too much supply and not enough demand, the prices drop, and that's what's happening. So it's as if it was not enough for the economy with the whole CV situation. Now the oil prices are dropping, and so a lot of these oil companies and gas companies are going to be hurting really bad. So as far as the stock market today, it's the biggest one-day point drop in the history of the stock market, over a 2,000 point drop. And then the second biggest was just last week, 1,190 point drop on the 27th of February. So how does that match up as a percentage? Well, as a percentage drop, it was only the 11th highest percentage drop at 7.79%. The biggest one-day percentage drop was in 1987. It was actually a 22.61% percentage drop in one day. So it's definitely a huge correction going on. It might even be a recession. We're not going to know if it's a true recession. Recession is gauged in 2 consecutive quarters of negative numbers. But it's definitely looking like 2008, 2009 times when the stock market was just crashing. So this is a chart of the history of oil prices. So today oil prices hit $30.96. The last time oil prices were down that low was in the early 2000s. So obviously the biggest thing spurring this fear is the whole CV situation. Numbers in the US and Europe are continuing to rise. So there's complete panic going on. And that's never a good idea. It's never a good idea for any situation to just completely panic. So I'm kind of going to be your voice of reason. So look up on the screen here. This is a chart that I showed before. There's been many times that there's corrections and issues going on in macroeconomics, in oil prices. There's earthquakes. There's other flu pandemics. Every single situation, the stock market has always rebounded. There's no reason to believe that it's not going to do the same thing this time. The stock market has gone over 400% since the last recession in 2008, 2009. So I mean, if you didn't pull out your money in 2008, 2009, you'd have made over 400% on that money if you just left it alone and just let it ride. So the stock market has just proven throughout history that it always rebounds. There's going to be corrections, there's going to be recessions, but it always rebounds. So now is definitely not the time to sell anything. Just hold on tight to what you got. And then if you have extra money on the side, what I'm doing is I'm deploying that money because everything is on sale. You know, all these prices used to be, 2 months ago, all these prices of these companies were overvalued, way overvalued, but now they're coming down to record low sale prices. Some of these prices that for the stocks I'm buying now, we haven't seen these prices in more than a year or over 2 years on some of the stocks that I'm buying. So here's a screenshot of some of the things that I'm buying. Some of this is my private account. Some of this is my public account that I share openly with you guys. So one of the stocks that I bought today is in my public account that I share with you guys. It's Uber. It dropped down to $28.90. And I picked up some shares of Uber. I'm gonna link the video below in the description, and that's in the video I talk about why I'm bullish on Uber, why I think they're gonna be a profitable company within the next 1 to 2 years. So on my other account, I deployed $4,200 today, so I bought more Tesla. I originally started buying Tesla when it was in the high 300s. Then the price skyrocketed to 700, 800, and almost touched 1,000. And I just felt like, oh, that's just way too expensive, especially when I already purchased shares and started my position at the upper 300s. So I didn't want to start building on a position at those higher prices. And I just kind of felt like I missed out at those lower prices when it was trading at $300. But now it's been dropping, and so every time it drops into the low 600s, I take the opportunity and I pick up some shares. So that's what happened today. It dropped into the low 600s, I believe 600 and I believe 620 or 630. So I picked up some shares at those prices. So you see on the screen, I picked up some shares of Nvidia and Walt Disney. In my previous video, I'll also link below. I go into a little bit of my thoughts about Nvidia and Walt Disney, but I'm going to talk a little bit more about Disney company in this video. I also picked up some shares of Visa. So Visa is a stock that rarely goes on sale. If you look at the chart of Visa, it just goes up and to the right. Rarely does it ever take a dip. And so now it did take a dip, and I just thought I'd get some shares of Visa. All right, Disney. Everybody knows Disney, right? You know, they have theme parks, they have cruises, they have television networks, movies, you name it, they're in it, right? Obviously, a major part of their company is tourism, right? So tourism is completely down globally right now. Their theme parks have shut down in Asia, and I believe in Europe they're going to be shut down, and they might even shut down in the US if things keep on getting worse, right? Obviously, their stock is going to take a tumble. Their revenues are going to take a tumble. But the way I think about it is, if you're going to go to Disney, you're going to go to Disney. If you don't go now, if you delay your vacation now, you'll go in 6 months, you'll go next year, you'll go in 2 years. Eventually, you're always going to make that trip, right? It's not like this happened and you say, oh, I'm never going to go to Disney. So if they don't make the revenue that they would make now, they will make it up later in the future. And so if that makes sense to you, it makes sense to me. And that's why I'm putting my money in Disney. And this is from their latest quarter report. So this is their first quarter of fiscal year 2020. I'll just read right here. We had a strong first quarter highlighted by the launch of Disney Plus, which has exceeded even our greatest expectations. The Walt Disney Company, thanks to our incredible collection of brands, outstanding content from our creative engines, and state-of-the-art technology, we believe our direct-to-customer services, including Disney Plus, ESPN Plus, and Hulu, position us well for continued growth in today's dynamic media environment. So yeah, Disney Plus was launched in end of 2019, in November, end of 2019. They have over 28 million subscribers in just 5 months. All right, so let's look at the revenue real quick. This is comparing 2018 and 2019, their fiscal year first quarter. So they had a 36% jump in revenue from 15 billion to 20 billion. And so a lot of that has to do with the launch of Disney Plus. And you'll see right here, Get Disney Plus gained 28.6 million subscribers. And so 28.6 million subscribers is definitely a huge number, but let's just see how it compares to the number one player in the market, and that would be Netflix. So compared to Netflix, 167.1 million subscribers, Disney Plus is just peanuts. But you got to consider Netflix has been here for I think it's well over 8 to 9 years, maybe even 10 years. I'm not even sure about the numbers on Netflix, but Disney Plus has only been here for 5 months. So let's see how much revenue that brings in. So Disney Plus is $6.99 per month if you just get Disney Plus. It'll be $12.99 plus if you combine it with Hulu and ESPN Plus. So $6.99 a month times 12 months, we get $83.88, and we'll multiply that by 28,600,000. $2.39 billion. So $2.39 billion in additional revenue that they did not have before, just from the launch of Disney Plus, thus far with the 28.6 million subscribers. All right, so let's look at the chart real quick of Disney stock. So you see right now, as of this recording, it closed at 104.35. So the last time it was down to 104.35, or in the 104 region, in that ballpark, was in December of 2018. And also you see right here where it says Disney Plus launch, you see that spike in their stock price. That is due to the Disney Plus launch. Obviously, it was a huge success, as we just discussed. And then the whole CV situation happened, and you see the whole stock price just tumble, take a nosedive down to 104.35 today. So my thoughts on this is now, Disney is now trading lower, at a lower price than what they were trading for before the Disney Plus launch. So essentially, the market is saying that that $2.3 billion additional revenue from Disney Plus is nothing, is not accounted for. And so that doesn't make any sense, right? Also coupled with the fact that what I had said previously, everyone's going to go to Disney eventually. If you don't go now, you're going to go later, and Disney's going to make that money up. Coupled with those two things, and the fact that they are growing the revenue, Disney to me is a good time to get in at these prices, these sale prices. All right, guys, well, that's the video for today. Just want to put things into perspective. Keep a cool head. Don't panic. Don't freak out. Just remember, these prices are prices that are good to buy at. They're lower prices. That's like, you never want to buy something when it's overpriced, when it's at the record highs. You want to buy things that are at the record lows. And so Disney is at not the record low, but I mean, considering how they have been growing, and considering their launch of Disney Plus, their acquisition of Hulu, and they also acquired 21st Century Fox. So they're growing, they're expanding, they're looking into the future. They're trying to have the direct to customer approach with their streaming services. So coupled with all these facts, Disney is a growing company, and it's a super profitable company. So at these low evaluations, it's just definitely time for me to get in. So let me know your thoughts. Do you agree with me? Do you disagree with me? Let me know if you like what I'm doing. If you do, please consider give a thumbs up. It really helps out the channel. Consider subscribing. I do a lot of videos about money and finance, and how to invest your money and how to make your money grow. Also how to get some bonus points, traveling points, credit card points. I do all that. So if you like what I'm doing, please consider subscribing. Catch you in the next one. Peace.